For decades, the American dream has been fueled by a piece of plastic. A $14 trillion empire built on one simple promise: buy now, pay later. Behind the convenience of credit cards, millions are trapped in cycles of debt, hidden fees, and compounding interest. But now, the banks are nervous. A pink-branded giant from Sweden has landed on U.S. soil, declaring war on the entire credit card industry. No interest, no traditional banks, and a CEO who started by flipping burgers at Burger King. Is this the end of credit cards as we know them? Or is Klarna just another trap in a prettier package? Today we decode the rise of a fintech titan. This is Rise and Revenues. Our story begins in 2005 in Stockholm. Sebastian Siemiatkowski, a Polish immigrant, worked double shifts at Burger King just to pay his bills. He wasn't a Wall Street prodigy. He was an outsider with an idea. While flipping patties, he noticed something. People wanted to buy online but didn't trust websites with their card information. His simple idea: pay the merchant first, let the customer pay later. A radical twist on online payments. He pitched the idea at a business competition. Judges laughed. "The banks will crush you," they said. But Sebastian didn't stop. That no became the seed of a $45 billion fintech revolution. Fast forward to today. Klarna is no longer a Swedish startup. It's a global fintech powerhouse. Its secret weapon? AI-driven credit scoring and seamless consumer experience. Traditional banks thrive on late fees and 20% interest rates. Klarna flipped the script. Most of its revenue comes from retailers, not customers. Its 0% interest, pay-in-4 plans have made it a favorite among Gen Z and millennials. In 2025, Klarna went public on the New York Stock Exchange, one of the largest IPOs of the year. The message was clear. The future of finance isn't a plastic card. It's an app, a platform, and a lifestyle. Every empire has its shadows. Critics warn Klarna's smooth experience encourages overspending among young users. Some call it phantom debt, trillions in obligations invisible to traditional credit bureaus. And then there's the AI. Klarna replaced hundreds of employees with AI chatbots, performing the work of entire departments in seconds. Efficiency for the company, but a warning about the future of work in finance. The U.S. credit card market alone is worth over $14 trillion. Klarna isn't just entering this market, it's challenging it head-on. By offering interest-free payments, faster transactions, and a mobile-first experience, Klarna is reshaping consumer behavior. Major brands like H&M, Sephora, and Adidas partner with Klarna to offer installment plans, increasing sales and attracting younger, tech-savvy shoppers who no longer trust traditional credit. Klarna is proof that even the largest industries can be disrupted by simplicity, innovation, and understanding human behavior. Klarna's story is a masterclass in disruption. A small startup with a bold idea challenged multi-trillion-dollar banks. The lesson: innovation, user experience, and psychology can topple giants. For investors, Klarna signals the rise of fintech and the need to stay ahead of technology-driven disruption. The era of old-school banking is ending, and Klarna leads the charge. As we move into 2026, the battle for your wallet intensifies. Banks launch their own alternatives, while Klarna explores stablecoins, AI shopping agents, and further innovations. The war is no longer about credit. It's about control at checkout. Will the credit card giants survive, or will Sebastian's pink empire become the global standard? One thing is clear: the old rules of money are being rewritten. If you want to understand the stories behind the world's greatest business battles, subscribe to Rise and Revenues. The journey to wealth starts here.